Good morning, everybody. It's the 23rd of September. We're Signal Centre Talking Ball. I'm Joe, joined by Steve and Jamie this morning. How you doing, gents?
Very well, thank you, Joe.
Good. Look, let's duck down a little bit to fit in here. There we go. Is that a bit better?
That's a bit
There
better,
we go.
yeah. Get your head
Lovely.
down.
Okay. End of the trading week, and it's been another bumpy one. And we saw some pretty significant moves yesterday on the back of some intervention and rate hikes by a number of central banks. So what we're going to do is start off with the latest headlines, just to let you know what's happened over the last 24 hours and what is behind these latest market moves. And then we'll do our best to dissect what's going on the charts and try and set you guys up for the day ahead and potentially into the start of next week as well. So in terms of the latest headlines, the front and center news story really was from the Bank of Japan. And we've been warning about this for some time now. The dollar yen price has hit some pretty significant levels of late. And we were concerned that at some point the Bank of Japan would intervene to support the yen. And that's exactly what they've done. It looked like the 145 level was the level that triggered that for the central bank. And just after the open yesterday, they announced there'd been intervention in the market through the Bank of Japan to support the yen. This was the first open market intervention since 2008, and as a result, the yen surged following the announcement, with the dollar slumping from a 24-year high just below the 146 level to trade at lows below 140.5 before regaining ground. So some pretty significant movements there. In terms of what happened with the Bank of England, as expected, they increased interest rates by 50 basis points. There was some speculation that they could opt for a 75 basis point hike. 3 committee members did vote for the larger hike, while new member Dingra backed a 25 basis point hike due to fears over the outlook. The bank lowered its peak inflation forecast to 11% due to the energy guarantee scheme, but also noted there would be significant impact on demand and pointed to major uncertainty over the outlook, especially with the government set to announce a major fiscal stimulus today. And in this context, the bank will assess the situation fully at the November meeting. While we were on the video yesterday, we saw the Swiss National Bank increase rates by 75 basis points. That was in line with market expectations. This moved benchmark rates out of negative territory for the first time since 2014. The central bank stated that it would intervene in currency markets if necessary and could buy or sell the franc, while it stated that further rate hikes might be needed. The Norges Bank opted for a 50 basis point hike as well, again in line with expectations. And in terms of the US, the yields continue to increase there. The US Treasuries came under pressure on Thursday, with the 10-year yield surging above the 3.7% and its highest level for 12 years. So again, we've talked about yields and why they're important for markets, because I think if it gets close to that 4% level, then that would indicate that market participants can go out there into the market, go and buy US Treasuries, earn 4% on their capital, rather than putting it at risk in this volatile market at the moment. So that's going to become an increasingly attractive investment for many market participants, potentially in the coming weeks and months. As we stated just a moment ago, there is some UK fiscal support expected today. We're getting a statement from the newly appointed Chancellor confirming that national insurance would, the hike there would be reversed from November. The fiscal statement will be released later today, with expectations of a very substantial fiscal stimulus, and reaction in the gilt markets will be watched closely. In terms of what else is happening, the global business confidence data on Friday is due to be released. The PMI business confidence data will be closely watched on Friday, with releases from the Eurozone, UK and US. The US services sector will be particularly important after the much weaker than expected figure last month. So plenty going on today as well to end off what's already been a very volatile week. So let's try and make some sense of the charts. Steve, do you want to kick us off with some cryptocurrencies to start?
Yeah, sure. Who's the new Chancellor of the Exchequer, Joe?
Kwasi Kwarteng.
Right. What's his CV look like? Is any good?
Don't know. Not sure. I'm not sure if he's qualified or not.
Yeah, that's the thing, isn't
We'll
it?
find out today, won't we?
Yeah, absolutely. Yeah, so starting with Bitcoin, a little bit of just the most interesting chart I can see today for Bitcoin is this short-term chart. Sorry, it's a daily chart, but it's so it's a short-term as in over the next few days or week or so, and we've sort of like posted this bottoming formations. These lots of these candles, especially when you combine them as well, show a good sign of a bottom. Now we've stalled in front of the previous spike low that we got in June when Bitcoin's had a mini collapse, got down to 17,600. We posted funny enough, we posted a lower low, but we haven't extended below the 17,600, so that's a positive. This candle here from the 21st is an inverted hammer. That's a bullish candle at the bottom of the trend, shows signs of the market looking to push higher but failing. But the following day, yesterday, we had a really positive candle, a bullish engulfing candle. So that looks really positive for me. So basically risk is if we break down back below the 18,150, then 17,600 looks like an ideal target, and you know, the risk of a break of there definitely elevates. But the reversal from here could be quite significant. We're talking maybe 2,000 or 3,000 points. It just be a natural double bottom type attempt to try and sort of like break above the 22,775 level. So for me, there's it feels like we're on a positive footing at the start of the day. Now, looking at the hourly chart, we've had a little bit of a attempt of a correction here, and yeah, if we look at sort of like shorter term levels, we could even say that the 18,800 level is a key level to hold. So would look on a short-term basis, look to buy dips here, targeting another retest of the resistance. However, the stop clearly has to be below the 18,150 and definitely below the 17,600. That is wouldn't be good. XRP, I've talked about XRP. Jamie tried to go against it yesterday, got his bottom smacked, or the day before, I can't remember. But yeah, this is the one that I believe is forming a really nice looking bottom formation. So for me, maybe definitely a double bottom, which I talked about, taking the head and the right shoulder, and I said you could extend that higher, or that basically the neckline of this inverse head and shoulders had a measured move target of 58. We've been up to 55.80, so not far away from there. Still good momentum potential to sort of like get up there, and that will be a 50% retracement, close to a 50% retracement of the sell-off from 91.50. So yeah, nice to spot that one in earlier in the week, and nice to see it play out the way it does. So yeah, XRP for me, out of all the cryptocurrencies, I don't study them hugely, but out of the ones that I've seen, the popular ones I've seen in the news, that is the one that I would definitely be keeping an eye on a lot more. Ethereum still doesn't look great, although yesterday, along with the Bitcoin, had a nice bullish engulfing candle the previous day. A little bit, it looks like an inverted hammer, but the actual body is quite big, so not exactly the same as an inverted hammer, but still a nice bottoming formation. Risk there below 12,222. Obviously, the resistance coming in anywhere between 14,000 and 14,500. Moving on to commodities, gold, we've been looking at, we're at this support level, this band of support, which is we highlighted a long time ago, anywhere between 1690 and it was down to 1670. We have broken below it. We would now say that band of support moves all the way down to 1654. So I can move that down like this. Really need to get a clear break of 1650 to really open up the downside. Levels to watch below 1560 and well, 1560 actually would be the ideal one because that would be the bottom of the channel. Further down, we've got other levels to look at, but we don't have to sort of like worry about them too much yet. We have to wait for the next real sort of dollar move higher to then this would be a concern. Crude oil had a little bit, this was my gun to head yesterday, which nearly paid off, but not quite. Had a big spike higher at one point. Everything looked rosy at one point before things turned around. On a short-term basis, levels to watch here. We've got resistance now coming in at 86.48. Above that, we've got decent resistance between 89.60 and $90. Below, we've got support. Looks like a little bit of a triangle formation now forming. Let's borrow you instead of going and getting another one. Nice little triangle formation forming. Or wedge, not really a triangle. And yeah, that is the interesting stuff coming out of commodities. Natural gas, take a quick look at that. That has continued the move lower. Actually got down to 718, which is a new swing low from broken down through the August swing low. So that's a lower low. It bounced from 718 up to 732, but still under a lot of pressure. So overall, crude, natural gas, and then energy commodities definitely still feeling the pressure, but there are some signs of prices holding at these current levels and maybe having a little bit of a correction higher. Really sort of a lot of it based on the dollar, Joe. I don't know if you can shed some light on the dollar.
Yeah, not really anything further than what we've already know with the US dollar. It continues to move to the upside pretty aggressively. So there was a little bit of a bump in the road yesterday, a bit of volatility created by the intervention that we saw and the rate hikes. Very large range posted yesterday, but we are back on the front foot today, up by 0.35%. So we actually closed below this 111.31 level yesterday, only ever so slightly, but we're pushing back above that today, and you wouldn't back against a close above that level. So this is the highest level we've seen for many years, in fact. So just go back to the left-hand side. We can see there was a previous swing low from September in 2001, which we're expecting to do some job as resistance, although not really doing much of a job on that at the minute. So above that, we're looking for really a move back to those highs that we posted in 2001 at around 121. So no signs of the dollar cooling off anytime soon. Obviously, the main story yesterday in the FX space was created by the intervention by the Japanese central bank. So probably a good place to start on a few of those currencies. Taking a look at Aussie versus the Japanese yen, we saw prices start to decline following the reach of new highs on the 12th of September. Since then, prices have started to move to the downside. And yesterday, we saw a break of this uptrend with a really large red candle. Big range, certainly didn't close at its worst levels of the session, but it was enough to close below the trend line and for lower prices to have persisted today, down by 0.5% on that this morning. If we take a look at euro yen, again, we saw prices fail into this previous resistance. Potential now for maybe a triple or double top if it can get down to these kind of levels down here around 133. Still got a fair amount of work to do before it does. Again, huge range posted yesterday, well off of the worst levels of the session, but we are aiming for those lows once again today with, again, this pair being off 0.5% or so as things stand. If we take a look at sterling yen, that's quite interesting. The chart was a bit messy. We've had a couple of requests to look at this in recent weeks. There was a big band of support here that needed to be taken out, which looks as though that's happening now. And we're also threatening the bullish channel as well. We need to see a close below that, this long-term uptrend line, before we can get really too excited about that. And then immediately we come into some more support levels anyway, around 158.22 to 158.40. If we take a look at dollar yen, obviously this is the main one that they're watching to try and as their barometer, I suppose, for when they are going to intervene, or because they have intervened. That was around the 145 level. So we saw a spike above that, but then a big move to the downside. Again, well off the worst levels of the session, and it can't make its mind up what it wants to do at the moment. I think I saw a chart that we shared around internally between us analysts yesterday about previous intervention. And I don't think any of them have particularly worked out very well or had the desired effect, certainly not in the short term. So it may be that we continue to see this dollar index persist, and therefore that's going to knock out any efforts by the central bank in Japan to try and stop the rise of this. The other market that was quite interesting yesterday was the Swiss franc, because we saw the or potential of intervention there. They mentioned that it was on the table, and of course they raised interest rates by 75 basis points. This is Australian dollar versus the Swiss franc, into a big support level here, the previous low that we posted back in December. We saw a close below that level on the 21st. Then we got the bank rate rise, and then we saw this huge range yesterday. So it needs to do a little bit more before it can reverse the overall tide on that. I think we need to see a little bit more confirmation, but this is a pretty good reference, I think, if you are maybe speculating or looking to build long positions. But of course, you'd have to have your stop loss down at these sort of levels below the lows of yesterday. And that would, of course, impact your risk reward if you're looking for any short-term upside move. Looking at Euro Swiss, similar situation. The overall trend remains very bearish. We saw some support form here on the 23rd of August, which did a job again on the 15th. But on the 21st, we saw a close below that. And then yesterday, we saw this big reversal candle. Again, for me, I need to see more follow through on that before I can get any sort of excitement, really, about where that's heading. And if we take a look at sterling Swiss, sterling continues to look pretty awful, to be honest, against most major currencies. And yen is no different. So sterling moving lower. We saw yen have a big move to the upside yesterday. The highs of the session were up at 111.48, but then we closed around 109.91. So big range, lots of volatility, but still no real change of direction for me there. Still looks like we are likely to head low with that. Moving on to sterling against US dollar. As we know, dollar strength continues to persist, and we've broken down through these pandemic lows at 114.10, and no sign of this slowing. Bit of a range yesterday, but ultimately still closed in the red, still closed at new lows and making new lows again today, down by 0.5% as things stand. And then finally, we'll look at Euro US dollar. Continues to trade in a downtrend, broken down through key support at 98.99 and making new lows today. So looks to be targeting this 95.95 level, which we have to go all the way back to 1985, I believe, to when it was, sorry, not, I was looking at cable there. This is back in lows from 2001 on the Euro US dollar. So no signs of this slowing, still looks pretty sick, and don't be trying to buy it, I think, is the key message there. It is going lower for the time being. And if it is going to bottom out, that's going to be a process which is going to take a bit of time. We're going to start seeing prices move sideways. That would indicate that we're getting a bit of a balancing out between the bulls and the bears. There's no sign of that happening right now. So let's take a look at indices, because they're getting a bit of a pummeling as well. We looked at the Aussie yesterday, big red candle posted, another one today. In fact, yeah, sorry, I'm on a weekly chart here. Let's just go to the daily. Yeah, further downside, looking to target these previous lows that we posted in June. No sign of it slowing. Big red candles on the daily chart, and the pain is being felt elsewhere. We're into some really big levels on the European market. So this is the Euro Stoxx 50 largest companies in Europe, and this is into a huge area of support around 33.85. If this gives way, then it really does paint a pretty bleak picture for the indices over the medium term. If you can see, this has done a huge job as providing support on the market. If that gives way, then we're probably going to start targeting and move back down to those actually post-pandemic lows. So there was a low there from October 2020. So that for me would be the next target if we do get a breakdown of this large level of support that we've got. And then below that, we're targeting maybe a move back down to the pandemic lows, which would be a complete reversal of the entire rally that we saw take place following the pandemic. Looking at the DAX, again, this is at a major level as well. We've talked about this level at 12,431. We are fast approaching this level yet again. We saw a little bit of a testing of that level yesterday. Each time we've got here, we've seen some pretty long legs form on the candles, although we've seen a little bit of a dip towards it. Eventually, it's been recovered. Not sure we're going to see that this time. I think, given the backdrop economically that we've got at the minute and what's going on in the world, we could get a break of this, and then we come straight into a 50% fib level. That's a 50% move of the entire pandemic rally, post-pandemic rally that we saw. That comes in at 12,130. So that for me, the first level to watch on the downside. Then we'd probably be targeting these reaction lows from October. Looking at the US markets, they aren't quite at those lows that we posted back in June. But they look as though they're heading there. I wouldn't back against it, that's for sure. So 11,035 on the Nasdaq is the level to watch there. No real signs of the bulls coming into the rescue at the moment. So further downside there expected. S&P 500, similar situation. Big red candles forming over the last few sessions. No real support in here. I mean, arguably, you could say there's a few candle wicks in there that may do a job, but we're right on that level now. For me, the lows from June look to be the obvious target. That's at 36.36 on the S&P. And then let's just take a quick look at the Dow. That's the one that's coming closest to that major support. We've got 38.2% fib level and these swing lows from June coming in at 29,672. A break there, and I'd be eyeing up a move down to a 50% retracement level of the entire move that we saw throughout the pandemic. So all looking pretty scary, really, on these markets, and very doom and gloom, sadly. Jamie, do you want to take a look at some stocks?
Yes, I will do. Doom and gloom continues, sadly. Starting off with our biggest loser of the day, we've got SMIT or Schmidt Industries. Had a really clean break of a descending triangle pattern here the day before yesterday, and then continued that yesterday as well, down 26.97%. Overall in the 2 days, down closer to 40. So yeah, a really clean technical pattern we saw play out there. Hasn't got really any news, I don't think. This is from the previous day. Let's see what it says. Oops. What have I done here? Come on, Jimmy. Here we go. We're sorting this out. Oh my goodness. I'm on Steve's charts. It's all going wrong.
Decent charts. Be careful with those.
They were excellent charts. Let me get back to my boring charts. Here we go. Yeah, so down pretty hard. I tell you what, we'll just park that on there and we'll move on. Biggest gainer of the day is Sava or Cassava Sciences. Had this really strong move. Has actually not been following line with this market correction we've seen recently. Up 35.65% yesterday. Bring up the volume as well. You can see that there's an abundance of buyers coming into the market. Bit of a double bottom pattern we've seen there, and a really clean break of this resistance level we had at 31.33. The measured move target for this double bottom is right into these previous resistance levels up towards 61.50, 61.60. So yeah, that again, a really nice technical pattern there starting to play out. Let's have a quick look at a stock heat map for yesterday's trading. So the main thing standing out here for me are Tesla, down 44% on the day, which after holding up really well for the last few weeks is now starting to come off a bit. We'll check that out in a second. But yeah, nothing really too crazy to report. I mean, Apple down just over 0.5%. Microsoft and Google actually ended up, I think they sold off at the start of the session, but bought back up slightly later in the day. And health technology looking pretty strong. A lot of green in there, but I'm a bit skeptical of the market overall, as I think we all are. So let's jump into a couple of these. We did have a request to check out Enphase, that's ENPH, which is actually one I've been keeping a bit of an eye on for a little while as a really strong performer and even a potential leader coming into when we do see a new bull market. But struggling now, and I think with where the market's at right now, this is the S&P 500 we've got down here, so you can see while the rest of the market's been selling off, Enphase has been putting in these higher lows. But I think if we do get a bit more of an extended sell-off here, it's going to struggle to hold on to these gains it's seen. But yeah, it's been performing really nicely. I think, but what happens, like I say, with the broader market will dictate where it goes next. It will struggle to hold this level of strength, I feel, if there is an extended sell-off. So one to keep an eye on there. Checking out Novavax again, 13% yesterday down. We've hit this first level of support now, which kind of marked at this kind of key area here at 23.13. Just keeps on falling. There's no signs of a bottoming really here at all. Next level we're looking at is towards these swing lows over here from April 17. Acts as a bit of a resistance coming into March 2020. But yeah, this is looking pretty grim. 13% on the day yesterday. We're going to get a load of, obviously being the end of the week, we'll get our weekly closes today as well. And the levels that a lot of these stocks close at will be pretty key. So we'll stick to a weekly chart for now and have a see how a lot of these stocks are looking. We've got Airbnb here. This, I think, has made quite a nice, again, so we didn't get it to the T, but we had this previous kind of area of support off the IPO base. We broke through that. I remember we looked at this at the time back in May. Really strong breakthroughs with good volume. Retested that really nicely actually last week before selling off into this week. So that was quite a nice technical trade playing out there as well. AMD, we're making a new low here. This looked to be one that was potentially rallying quite nicely. We did have some volume coming into the market as well, but it's sold off again, and now this is looking pretty bleak. We're making new lows again, breaking through a pretty key area of support at 73.85. So these are the lowest levels now we've seen since July of 2020. Opening up much lower levels. Let's try and get some Fibonacci targets on here. So you can see AMD's had a really strong run, really since, well, 2015 is where it bottomed out. Let's have a look, see what we can find here. So we've got the 61.8% fib there at 69.50, and then the 78.6% fib comes in really nicely with the pandemic lows there at 36.40. So that, I mean, that would be a 50% fall off really from where we're at now, just under 50%. So yeah, a fair way potentially to fall for a lot of these names. Nvidia is the same in the sense that we're putting in a new low on a weekly chart. Again, I like to look at volume. Look at the big weeks we're seeing are these bearish red bars here, and we're seeing the lower highs and lower lows being put into the market. No sign of a bottoming again. I think the sell-off will continue. Next level for me really is these March 2021 lows at about, where is it? It's too much red on my screen. I think that's 118.86, isn't it? But other than that, let's quickly chuck on some more fibs, see where we could be heading for Nvidia. There we go. So there is too much red. Let's get rid of some of this. Here we go. Yeah, 78.6% fib, a fair bit lower, but like I say, I'd expect to see some buyers come in before that. But 78.6% will kind of be around that $100 level as well. So psychological level 2 down there. Tesla we want to have a look at. We'll check this out on a daily chart first actually. We noted yesterday that Tesla had hit this previous resistance that was setting up quite nicely for a bit of a breakout. But with the broader market setting off, Tesla couldn't push through and actually was down 4% yesterday. Heading back towards this swing low, which at this kind of next phase of Tesla is pretty important, because if we do get a break of this low we've seen here, there we go, kind of a close below in this area, that would be a lower low we're putting in and could be the signal for at least a shorter term sell-off on Tesla, perhaps back down to these lows we saw back in June. So yeah, one to keep an eye on there. A pretty important close this week. I mean, if it closes anywhere around this area, it's a very bearish looking candle. Check out Ford again. This keeps on selling off. We saw it was down 12% a few days ago. No real relief in the last couple of days, closing at the low of each day, which I always think is a bad sign when it closes at that low. Volume is still higher than the average 20 days. Not looking great at all for Ford. I guess targeting down here, these lows $11, so fair way to go there. Nike looks like we're putting in new lows again. Same kind of story as Nvidia and AMD. Check out Moderna. This is one that's back to this really key level, which we've noted for a while. I actually thought we'd perhaps get a break around this level back in June. Not to be though. We've consolidated a bit longer, but to me now this looks like it could be ready to go at some point soon. Had this pretty aggressive sell-off all the way up for down from $500, fell pretty sharply to 122. Consolidation throughout most of 2022 now, but we're back here again, drilling it down to a daily chart. Looks like the buyers are really struggling now to defend this level. And yeah, to me this looks ripe to break a fair bit lower. Let's chuck some fibs on this chart as well. See, we'll take it from the all-time lows to the all-time highs. Yeah, I mean, we can see the buying happened off that 78.6 fib, and now, you know, if we do get a close below there, it's all just kind of technical support. We've got this kind of area of consolidation here, which I think will be the next spot of buying, but that's still about 50% lower from where we currently are. So yeah, I think we could have a fair bit to go on Moderna. I think that's pretty much it. I wanted to check out Avacta quickly. We've noted the $100 level on this for a long time, and it's held up really nicely again, well, at least so far, with buyers stepping in, I think pretty much to the, yeah, you can see, if you look at this top left bit here, so the last 2 days of trading, you can see that the low was $100 exactly, and the close was $100, and then the yesterday as well, it was the same. The low was $100 and the close was $100, and it seems to be buying off that a bit now. So still playing out really nicely in terms of this range we've seen. But yeah, we'll call it a day on the stocks there. Obviously, week ending now. Let's see how these closes look going into next week, and yeah, we'll get a bit more direction from there.
Yeah, lovely. Okay, Jamie, thank you. So, really, we can move on now to the gun to the head challenge. So this is where each of us pick a live trade idea on the video in the hope that it plays out between now and 9 o'clock in the evening. All the ideas are placed at market. They all have stops and targets because obviously risk management is vitally important. It is just a bit of fun, and well, it should just be a bit of fun, but in the current market conditions, it's becoming more of a chore than fun, to be totally honest. But you know, we're all in it together. So let's see what we can come up with today. In fact, before we do that, we can have a quick look at what we did yesterday. So anybody who wants to check these out can do so via our TradingView profile. That's at signal_center. So yesterday I was trying to sell a rally in Ethereum, which didn't work out. I was stopped out on that. Jamie was selling Ripple, so we went quite heavy on the cryptocurrencies. That didn't work out either, as we can see, quite a strong move. Well, still going. And Steve was looking to buy oil, and I believe you were slightly offside at 9 o'clock. You got very close to the target though, Steve.
Yeah, it's frustrating, wasn't it?
Oh, yeah, look at that.
So not too far away. You should have trusted that line you had on the chart. It seems to have done a pretty good job. It's always the way, isn't it? Those old lines you've got on the chart.
Yeah, it's.
No, why did I have that there? And then it does it.
That's it. I should, if I wanted to go for that line, which was obviously the ideal level, my stop would have had to be a little bit tighter, which I didn't feel comfortable with because I still feel bearish towards oil overall. But shows you can still have opportunities trading. You don't just need to know or need to have the sort of overall view on where markets are going, because that's more investing. This is trading.
Yeah, absolutely. Okay, so who's brave enough to go first?
Me.
I'll go on then.
Oh, what about, have you done our other results? Have you sort of like updated the spreadsheet?
Yes.
How's that looking?
Let's have a look, shall we? So this is the spreadsheet that we've got. So these are the overall. I haven't got TAF's trades in there yet, but I will get those added in. I think it's got 4 or 5 ideas to be added to this. But yeah, so obviously we've done many trades now, over 600, approaching 650. Win rates around 40%, which isn't amazing, but we're still up quite
Mm.
considerably because we do have this approach with risk reward that we're always looking for at least 2 to 1 on the risk reward ratio. In most instances, quite a lot higher on these trades actually. In terms of the overall performance, we can see here since we started back in 2019, we had a really nice run. We peaked out in 2020, so well after the pandemic had got underway. Then we went through this large period of consolidation. Then we put together a decent run, come pretty close to making new all-time highs, but we've had a little bit of a dip back due to the volatility in recent sessions. So overall, we're still looking pretty good. But yeah, hopefully, I mean, thing is, it only takes a couple of big winners, and then you're back above that level. So you
Absolutely.
never know when they're going to come.
No.
Yeah,
But
exactly.
we keep throw enough mud at the wall, some of it'll stick.
Indeed. So go on, Steve, go and sling some mud for us.
Okay. I'm looking obviously at natural gas. After yesterday's lovely break from that, the sort of break through the head and shoulders, the retest, very indecisive retest on the 21st. Yesterday was the big follow through, further downside expected for me. The measured move target for this is down at 565. So I'm going to try and take a little bit of a short-term play on this. And the formation which has piqued my interest after yesterday's sell-off is this bearish pennant type formation, selling here. The stop, actually, Joe, you made me want to be more aggressive with this. So the stop is going to be
Blame me.
yeah. Absolutely. Oh,
Well, that's a big old stop.
72 point. Can you do a point? Oh, 72 then. There you go. Much more aggressive stop. So if we do 75, that's better. That's what I was trying to do. 75. So the risk reward is 6 to 1. That's a little bit of a you're going a bit quiet
Steve,
there, Joe. Now
you're going straight for the all-time high on the P&L there, aren't you?
yeah, exactly. Yeah, that's what I'm thought. So I've put it all in here. Getting in at 731. Targeting 686. Stop at 739.
Okay, I'm going to go for something a bit crazy, looking at the DAX. So this is the weekly chart, and we've spoken about this massive level that we're at now, 12,431. I've got it out on the weekly. Let's take a look at the daily. It's a huge area of support that's done a pretty good job previously. Is it going to do another job again? I mean, potentially, but my general feeling is that it won't, and we are actually going to see a breakdown of this. But it is so close to this level at the minute that I think, from a risk-reward perspective, purely on a speculative basis to buy this, it could be a decent opportunity to try and scalp something out of this. So I'm going to look at this on the 4-hour chart. I mean, even looking at this, it looks like a head and shoulders, and it's just totally ugly any way you look at it, but it is into a massive support level. So I'm going to try and buy at 12,457. Got a fairly tight stop loss of 104 ticks, which is at 12,344. That's below the low that we've referenced here back in July. And I'm going to target a move up to these highs here that we posted on the 20th of September at 12,920. So I'm looking for a 4.5-hour return on DAX today, hoping for a pretty strong reaction from this major level of support that we've highlighted on the chart. So highly speculative stuff, but who knows? Let's see.
Yeah, good luck.
Jamie, over to you.
Well, I'm miserable at the moment. I've drawn these really nice curves here to show my descending triangle I had on FTSE. When I was looking at it, it was at the level that I've marked here. Looking at that break, it was happening, but it's happened, and I can't get on this now. It's too late. The risk reward isn't there. So I'm going to travel over to France, and I'm looking here a similar kind of pattern. It looks to be an earlier stage of it. You can see the lower highs being put in, and what looks to be a break of this support. What I like about this a little bit less is, as Joe said on the DAX, we are coming into this really key support on a lot of these European indices. But I'm going to take the trade the other way too, Joe. I'm going to look to sell CAC at current price, which is 5896. So let me just adjust this slightly. Now the problem I've got though is I want to get good risk reward, but I also don't want to have my stop too tight. Now ideally I'd put it above this swing high, but that only gives me a 1.46R risk reward if the profit I take is going to be at these lows. So I'm going to tighten it up. I'm going to be quite aggressive and hope it just goes from here. Keeping it, where should we keep it? We can keep it just above this little consolidation here. Only gives us a smaller risk reward, but you know it's still over 2, so that's fine by me. So keeping the stop tight at 5949, and like I say, we're going to target. If I bring this out to a daily chart, we have a lot of wicks around this area, which is obviously what Joe's looking to hold up his trade. So that's what my target's going to be on CAC. Right down at 5787, and that gives me a pretty conservative target, only giving me a 2.06 risk reward. But yeah, it looks like this is ripe to move lower, and I think Joe would probably agree, although it might hold up today, and that's what he's hoping for. These indices are looking pretty shaky and ready to go. It's just a matter of when, in my opinion.
Yeah, CAC looks CAC by name, CAC by nature at the minute. So
yeah, it's true.
Yeah, that doesn't look nice at all. Okay, so 3 trades there. They're all going to be published up to our TradingView channel. So if anybody wants to check them out, please feel free to do so. We'll follow the progress of those up until 9 o'clock tonight, when we will close them off, and then we'll reassess on Monday. So looking at the day ahead then, what else we've got to look forward to today? So we do have this UK budget, which is likely to impact UK markets today. But aside from that, we've got these PMI numbers, and they'll be closely watched, particularly the US one, because there was a much weaker than expected figure last month. So at 9 o'clock, we've got the Eurozone one, 9:30 UK, 2:45 US. And then over the weekend, we have the Italian general election, which could further upset the European markets, potentially. So yeah, we'll have to wait and see how it looks on Monday. But that's pretty much it from us, unless you guys got anything further to add.
No,
all good from me.
Excellent. Okay, well, have a great weekend, everybody. Good luck if you're trading. Be safe out there. Use risk management, and we'll see you again on Monday. Take care.